Harley-Davidson is one of them. Surprise profit for Harley-Davidson, and the shares are up by 7.5%. Adjusted profit 15 cents a share. Had a 44-cent loss a year earlier, and analysts have been looking for a loss as well. Revenue from motorcycles and related products, $816 million. I mean, basically, Soz, we have seen a pretty sizable turnaround for Harley-Davidson.
It is a different company, and we've talked with new CEO Jochen Zeitz back in December. We talked to him in December when they announced the spinoff of their electric vehicle operations. You did get the sense that the company continues to look for areas to cut costs. Now, I do not see those cost cuts per se typed into the company's outlook for this year, looking for revenue growth of 5 to 10%, operating income to fall 20 to 25%. Looks like they're cutting back a little bit on CapEx, but still, the stock this morning looks to be trading off that revenue growth number in this most recent quarter up 40%. Now, that is not a number you have historically seen from the likes of Harley-Davidson. Reflects, I think, a more streamlined portfolio from the company. Also, number two, sales in the North America market up 8%. Obviously, North America remains the key driver of Harley-Davidson's business. So to see sales up there 8% while seeing some pressure overseas, I think the market likes that as well.
Yeah, definitely. So it's not just obviously not just a cost-cutting story. It's also getting the portfolio right and selling more bikes too. So not definitely good news for the company. Let's also talk about TakeTwo this morning and that company's numbers. Net bookings is something that gets attention at something like a video game maker, and net bookings came in short of Wall Street estimates. It was $866 million, just short of what analysts have been looking for. The company's forecast for net bookings in the current quarter is also below what analysts have been looking for. So that not helping matters, and that $866 million of revenue overall missing estimates, earnings per share beating estimates. But also, it's a pressure cooker kind of video game market right now, Soz. I mean, yes, Take-Two's buying Zynga. That's expected to close in its fiscal first quarter, which I believe is going to be early next year, if I've got their fiscal years right.
You got it. Got it.
But even so, Take-Two is still, it's just such a competitive market right now.
Yeah, just looking at some of the analyst notes, Julie, that have hit the wires off of this quarter, looks to be some Grand Theft Auto fatigue. At least that, I think, is one of the street's takeaways after that earnings call last night with Take-Two. But look, there are positives here. You have NBA 2K22. They sold 8 million units in the most recent quarter. That is very impressive here. Overall, bookings are still growing, just what you mentioned, Julie, just not living up to market estimates here.
Yeah, although some of the analyst commentary this morning is still pretty positive that this is sort of a temporary setback, if you will, for the company. So we'll have to see what happens here when it comes to Take-Two. And then also we are going to be looking at Chegg. Chegg is the one-time, well, I guess they're still a textbook publisher, right? But they also do more than that now that a lot of textbooks have gone beyond just the physical textbook and have gone online. But the company coming out, as you can see there, with numbers beating estimates, and the company's forecasting the first quarter numbers ahead of estimates to both revenue and EBITDA for the first quarter, going to be ahead of what analysts have been looking for. And basically, it looks like expectations were running pretty low into this report. And so coming in better than expected was a relief to the street, and the shares are up 6.5%, Soz.
A little bit of I think a lot of folks in the street are breathing a sigh of relief. It was just, I believe, 3 months ago where the stock was absolutely obliterated to shreds after the company's most recent quarter. So Chegg coming out here, seeing some strength in the services, seeing some upside in sales and operating profits. The street is loving all of it.
Yeah, it looks that way, definitely. As you say, on the back of some pretty lousy performance going into this.